Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There's never been a technology that has the potential to disrupt real estate as much as blockchain. And whether or not your head's in the cryptocurrency space, today we're going to talk about the intersection of real estate, cryptocurrency, and blockchain. And we've got a great guest on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us live at the New Orleans Investment Conference, October 19th through 22nd. Now in its 47th year, it's the nation's longest running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Ron Paul, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, Peter Schiff, and George Gammon. And of course, the Real Estate Guys are speaking again this year. Plus, we're hosting a private hospitality suite one of the evenings with some very special guests. So make plans to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, our co-host, financial strategist, Russell Gray.
Hey, Robert.
You know, real estate is awesome. We love everything about it. It's beautiful. It's all over the world. Everywhere I go, there's real estate. You can make money from it in lots of different ways, but it's certainly not the only thing. A few weeks back, we talked about precious metals, gold and silver. Today, we're going to talk about a very interesting and inevitable intersection, and that is real estate and cryptocurrency. On this year's Investor Summit, we brought cryptocurrency into the mainstay and had a great gal who led a lot of discussions and took us on a primer of not just cryptocurrency, but blockchain. And that really got a lot of people thinking about it. We've had a few folks in our tribe who are actively using cryptocurrency. But the traditional way in real estate is, okay, well, I'm going to use crypto to buy real estate. If the seller will accept it and I'm the buyer and I have it, then all is good. But as you'll learn today, there's a lot more creative ways to use cryptocurrency in real estate than just that.
Yeah, well, I mean, there's a lot of stuff that has been happening, and I'm probably a case study in someone who's kind of thick in the skull and hard to get it. You know, Robert, you and I were together at Freedom Fest, probably 2011.
Yeah, 2011.
And Jeffrey Tucker and I think Naomi Blackwell was her name. They were up there and they were leading a panel telling everybody about this new technology, cryptocurrency, Bitcoin, how it was going to revolutionize the monetary system and set people free. And it was intriguing.
And at Freedom Fest, which is typically 2,500 people, the room we were in, the breakout room, had about a dozen of us. So it wasn't mainstream back then for sure.
Oh, no, not at all. Not at all. And the challenge is people who are techie, people who get it, they speak kind of their own language. I always talk about how marketing people struggle talking to tech people. But, you know, you and I weren't convinced. We went out for a nice sushi dinner that night. And if we would take the $150 that we blew on that sushi dinner and had put it into Bitcoin, I think I calculated the next time I saw Jeffrey that it would have been worth nearly $100 million. And that was only when Bitcoin had peaked up to 20,000. Today, at what, 50 or 60, it would have been worth double or triple that.
You know, I'm starting to get those heart palpitations, so you probably want to stop with that story. But I think the point is that the old dogs and new tricks, sometimes we look at something and go, I just don't understand. Our friend Robert Kiyosaki showed us his Bitcoin wallet several years back and said, look, guys, I bought Bitcoin not because of any other reason than if I have it, I'll pay attention to it. And that was long before everyone was paying attention to it. So there's still, you know, it's still early in so many ways because with a few exceptions, it's not accepted in too many locations, at least most cryptocurrencies. Bitcoin, arguably the one that's accepted the most places. And in fact, Russ, just this week we were talking about that.
Yeah, absolutely. You know, I peruse the news all the time looking for clues. And one of the headlines that popped across my feed was the second largest mortgage lender in the country is now accepting Bitcoin for payments for the mortgages. So I thought, okay, well, it's just really crossed over into mainstream real estate. And once that happens, I feel like it's going to start to pick up speed. And then kind of going back to this evolution, you know, you mentioned Kiyosaki, and you and I and Peter Schiff and Simon Black from Sovereign Man were all sitting in Puerto Rico having dinner way back, and we were talking, and Simon, the young guy guy at the table was trying to convince the old geezers that Bitcoin was something, legit, real. And he wasn't trying to sell us on it. He was just trying to help us understand it. And all of us were like, nah. Peter is famously still very much in that anti-Bitcoin camp.
He's a Bitcoin bear, but he's an everything bear.
Well, there's another big guy. John Paulson made a bunch of money shorting the mortgage-backed securities and calling the 2008 crash. And he's in that same camp. He thinks it's going to go to zero. And I watched Kiyosaki go from kind of being not understanding Bitcoin and not believing in Bitcoin to becoming a believer and really a promoter of Bitcoin. And I think, you know what, I have to confess, I'm probably moving a little bit more in that direction. I just got done reading a book that kind of enlightened me. And I began to understand the value isn't its intrinsic value. And really, that's true with the US dollar. There's no intrinsic value to the US dollar. The value is in the utility. And once I grasped that concept, I realized, okay, now I understand, because now you look at when a mainstream mortgage lender starts to accept it. These are big transactions. This is a lot of money. Now it's going to start small, but it's kind of the camel's nose under the tent, if you will. And if in fact there is going to be this widespread acceptance of Bitcoin, from a utilitarian value, I love the idea that you can step outside the banking system. I understand that's why the central banks don't like it. And the fact that it's fungible down to like little tiny fractions of Bitcoins.
Satoshis.
With limited supply. So all of a sudden it's like, okay, the light bulb is starting to go off for me. And then the question now as a strategist, once I accept the tool, is how do you actually incorporate it in to your investing strategy? How do you incorporate it into getting a deal done? And so fortunately, we have somebody who is expert at that and going to help us understand all of that. So this is going to be a great show.
And it's not just a show on cryptocurrency, right? There's already 7,000 podcasts about crypto. And if you really want to get your head into space, start listening to folks that really know that. And there's two elements. One is the cryptocurrency, like Bitcoin or the 2,000 other cryptocurrencies. And then there's the basis of the blockchain or distributed ledgers. And both those things are going to be super interesting to real estate investors. So our premise today isn't to be pro or con or educate you about Bitcoin as much as it is to alert you that these two things are intersecting. Like it or not, believe in it or not, cryptocurrency and real estate are intersecting in lots of interesting ways. Our guest today has just released a book this year, 2021, called Cryptocurrency and Real Estate, How to Profit as Bitcoin and Blockchain Revolutionize Real Estate Investing. When we come back, you'll meet our new friend, Steve Streetman, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me December 3rd through 6th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in December in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates, as well as full travel details. So join me in Belize December 3rd to 6th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Hi, this is Sam Freshman, author of Principles of Real Estate Syndication, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com. We're talking today about the intersection of real estate and cryptocurrency. It's already begun, and there's a lot more to learn. We've learned a ton about it by reading this awesome book called Cryptocurrency and Real Estate, written by a Real Estate Guys listener who sent it to us for a review, and we get a lot of books sent, but this one jumped off the shelf into my hands, and both Russ and I have now. I think Russ has read all of it. I've read 80% of it, and I'm anxious to read the rest. Let's say hello to Steve Streetman. Hey, Steve.
Hey, how are you guys today?
We're good. First of all, thanks for listening. You've been a listener for quite a while. That's awesome.
I love the show. I'm very excited to be on the show, actually.
Well, we're thrilled to have you. You know, your background is, in of all things, cryptography, right? So we'll ask you to tell us a little bit about that, because there's a lot of Johnny-come-lately crypto experts out there. I mean, I was watching a guy the other day, he's, this and that and flashy. And he said, yeah, I got started investing in crypto in early 2020. Okay, well, that to me, that's like longer than most people, but not long enough to warrant a deep, knowledge of anything, let alone where it might be going. And of course, Russ and I have already admitted that we were too dumb to embrace it early. There's actually another story we could tell you if you have time about how we were dumb again. But I think this is a chance for us all to understand what's happening. So before we even talk about what's in the book, which is awesome, maybe share with us your background, because it's the unique parts of your background that make you the perfect person to have written this book.
Well, yeah, I think that's actually true. I started off my career as a cryptanalyst. I actually broke codes and ciphers. And I was with a three-letter intelligence agency that we won't name on the show, so we don't have to shoot anyone. And I learned all of that. And the real basis of cryptanalysis is analysis. So you learn to analyze very generic systems. I translated that into other types of intelligence community systems and sensors. And so I actually have a patent for an arbitrary way of putting sensor data together, which is embedded in a system that has been running at a certain five-sided facility for 20 years. So I'm kind of proud for that, because that system has been tried to be displaced a number of times. Translated that from sensors into models. And so I've done terrorism risk assessment, quantitative fashion. So I'm a formal risk analysis as well. And then I read Robert Kiyosaki's Rich Dad, Poor Dad, and it totally flipped the switch in my mind. So I got into real estate investing, rehab and commercial. I've owned apartments, self-storage, assisted living. I learned about Gene Guarino through this show, and I've worked with him on some things. I also read a book, again by Robert Kiyosaki, The Big Book of Real Estate. And there was a chapter on real estate exchange. Yeah. And I thought that was such a cool idea. I didn't even go on to the next chapter. I went right to the website he had in there and signed up for the next conference in their education.
Well, and this is a really unique part of real estate. So I'll stop you for a minute there, because the whole idea of exchanging has been around since the dawn of time. Before we had money, we bartered, we exchanged your cattle for, my sheep or whatever. And that still exists today. But the organized exchange communities are pretty fascinating. It's like a subculture in a lot of ways, but a lot of real estate folks really start to pour it on when they get introduced to the creativity that you'll find in places like that.
Oh, and I've been amazed. I've been a member of the National Council of Exchangers, I think, for 10 years now. And the guys there, they're trading real estate like baseball cards, right? I'll give you my 2 houses for your apartment complex. I'll give you the 2 houses and a note. Or we'll have these 2 properties come together, and I'll create a note against my property, and I'll trade you the note for a down payment on your apartment complex. it gets very, very creative strategies. And it was through that community that I actually got into cryptocurrency as well, as I was trying to move some land, and a broker brought me an option of selling it for cryptocurrency. And so I started looking into that, and they set a price very early on. And by the time I closed, the price on the blockchain was 30 times my buying price. So I went ahead and closed.
Yeah.
It's been a very interesting ride since then. I think the cryptocurrency itself has appreciated more than 120,000% since I acquired it. But there's also dangers with that, because the cryptocurrency, while very valuable, has liquidity problems. So it's not very easy to sell. So Bitcoin you can sell anytime you want. Ethereum you can sell anytime you want. But the vast majority of the 10,000 or so cryptocurrencies that are out there have very little liquidity. So an investor has to take that into consideration when you look at that.
Well, that's a great point, because one of the things about real estate is it's not very liquid. Now, that's a negative in some regards, but it's positive in some regards. I don't just, freak out and hit the button and sell. I have to really think about it. And the imperfections in the market actually are a strength in so many ways. And to some degree, we've seen that in cryptocurrency. Obviously, one of the issues people have to get their mind around is the volatility, which you make the point of happens early in kind of anything, and that eventually we would probably see there be less. Plus, if you look at just the long-term trend, it's pretty apparent. But to help real estate investors get their mind around volatility of how we would consider price in terms of dollars, right? A Bitcoin is a Bitcoin, but people can't help but look at the Bitcoin and then see what it's worth today.
Well, that's true. I mean, everyone looks at that. Everyone denominates assets in terms of dollars. We do it with real estate. We do it with cryptocurrency. But when you go into the crypto exchange world, as we were talking about, their recommendation is that all transactions should be unpriced. That when you're trading real estate for real estate or assets for assets, that you shouldn't be applying dollar values to it, because what you're really trying to solve are people's objectives, not necessarily prices. And so the people become very centric to real estate exchange, and they're far more important than any sort of dollar value that you put on the property. And cryptocurrency really should be the same way. While they have this published price, that price is sort of a market estimate and not something that's really set. It's not even really set in electrons, barely. So it's something that varies quite a bit.
Well, we make the point about real estate, right? I look at what my house is worth today, but if every house in my neighborhood went on sale on the same weekend, well, my price is going down, right? Same thing with cryptocurrency. What determines the price are the people exchanging at this moment. I might have got it a month ago or a year ago, or if I was smart, 10 years ago. And so price doesn't mean that much. And that's the first step in kind of understanding this. I'll share with you the mistake we made. We have a development project where we had an offer from a guy who had a radio show and a podcast. And one of his advertisers said, would you take half in cash and half in Bitcoin? And he goes, well, I guess so. And so he accumulated some Bitcoin. He saw our project and wanted to buy a house and said, hey, would you guys take half in cash and half in Bitcoin? And my two partners said, well, how quickly can we get the Bitcoin turned back into cash? And I said, well, I don't think that's the right question. I don't think you want to own Bitcoin to turn it right into cash. I think you want to own Bitcoin because it's Bitcoin. And we took a vote, and it was 2-1. I wanted to take the Bitcoin, and they both said no. And so we didn't. And that would have been dumb of us in 2015 to have sold a house for half Bitcoin, right? So the point is, we're going to have to get our minds around this. Now, in your book, you do a great job of two things at the very beginning, assuming no one knows anything about cryptocurrency or real estate. So we're going to leave that to the side. If you don't know anything about cryptocurrency, lots of places to find it out. We are going to super strongly recommend Steve's book because he's going to cover the basics and then more importantly, this intersection we're talking about. And then you do a very nice primer on real estate investing because you got folks who read the book that don't know about that. Let's kind of fast forward, assume everybody understands those two things to some degree. Now let's talk about this intersection, the transactions. And I think before we even talk about cryptocurrency, let's stay on the exchange topic for a little bit, because prior to even the invention of Bitcoin, exchangers had kind of a currency, we'll call it.
Well, yeah, I mean, exchangers have currencies in terms of land, right? So there's pieces of land that really have very little development value, but they're still physical things that are not going to go away, right? They're assets that are going to always be there. And so they would call it currency land. People would trade these lots. Well, I'll add a couple of these currency lots to my house to make up the difference in equities for buying your larger house. And so those were traded. Now, those weren't really digital. There were digital currencies before Bitcoin, but because they were all centralized, pretty much all their founders are in jail.
Right. I like the idea, but it's the decentralized part that makes it work.
Yeah, the decentralized part makes it so that there's no one for the government to go after. And there's no real place for them to stop it, which is why it's still around.
Well, and I guess my point of that is that example you use is a great one, because having seen some of those transactions where there's this almost placeholder property that gets danced around quite a bit, it's this idea that instead of me trading you directly, we have this intermediary step, which is a way to view any currency, right? And Bitcoin certainly. So you could just say, well, okay, I'll take the Bitcoin because I know then I can buy something else for Bitcoin. But there's actually a lot more ways that real estate and cryptocurrency and blockchain are coming together.
Well, that's true. And you have to remember, as you were thinking before, when you were talking about the Bitcoin, if you had kept the Bitcoin and held on to it, it would appreciate. And then you would have had a lot more money to reinvest in real estate.
Yep.
And that is one of the main points in my book, is that it's not cryptocurrency or real estate, it's cryptocurrency and real estate. If you have some of each, you get the rapid appreciation of cryptocurrency, which you can now put into larger real estate values. Or if you have a lot of cryptocurrency, you can capture your current price, reduce your volatility, and get all the tax benefits of real estate by moving some of that into real estate. So it's this back and forth between rapid appreciation and volatility and the stability and all the other benefits of real estate that's really kind of a nice synergy. I think I call it the Reese's cup of real estate investing. Real estate's the chunky peanut butter and the cryptocurrency is the nice dark chocolate on the outside.
Yeah, I love that analogy. And, you make a case for a lot of other technological advances. And this is one of the early things, actually, that people were talking about blockchain, not Bitcoin, is just as a distributed ledger that has lots of copies and lots of checking and verifying, that it would work for things like holding title and contracts and all of that. And you talk in the book about smart contracts. Can you edify us about that?
Sure. So one of the kinds of cryptocurrency is smart contracts. It allows you to put any sort of kind of application on the blockchain. There are countries right now, I think Estonia and Georgia are already in progress of putting all of their real estate title on a blockchain. It's great. I mean, the transactions are immutable. You can always find them. They're easily searched. So it would speed title searches. It would make sure that everything is there, and it'd be electronic, and it can be stored in multiple places. So you don't have to worry about the courthouse burning down and all of your paperwork going up in smoke.
Right.
So I think that is going to be one of the futures. The real question I have is whether that's going to be a standard kind of smart contract or whether it's going to be one of these new non-fungible tokens or NFTs, which is one of the hottest things in crypto right now. There was an apartment building in New York City that was just sold as an NFT a few months ago. And so you still have to follow all the standard recording procedures, but ultimately you may not have to do that. The NFT may itself end up being recorded on a blockchain. So all the ownership would be through that.
Well, and this is fascinating when you think about what a title insurance company does. They're insuring the title and they're going back and checking records and so forth. If you routinely buy title insurance on property, then you're probably an American. Because in many, many other countries, the idea that a third-party insurer would somehow protect your property rights doesn't even exist. So in a way, the title companies have kind of a thing going. Now, all of a sudden, it's on blockchain and it's publicly distributed. If the title companies are smart, they'll be in the front end of that wave instead of being replaced by this. But again, we are so early in this game, and it's easy to sit back and go, yeah, well, we heard about Bitcoin 10 years ago. We barely scratched the surface. Even now, even though people will accept Bitcoin for certain goods and services, certain stores, as we mentioned at the beginning, now the second largest mortgage company in the U.S. will take payments. A lot of international real estate developers do, for reasons I'm sure we'll talk about. It's still not as readily available to use. And part of the big attraction in real estate is that the numbers are big, the properties are all unique, and this is a way for folks to kind of see maybe another use for a cryptocurrency instead of just when can I buy a pizza with it.
No, you're absolutely right. And there are a number of intersections between real estate and cryptocurrency. Title in the blockchain is one big one. Another way is to use it as what they call a property tokenization, where you divide up the pieces of the property into small bits, and each one of those is represented by a cryptocurrency. So it works just like a syndication, only now your investors own a cryptocurrency backed by the real estate instead of the real estate directly. And this gives them some advantages in terms of liquidity. What are the two biggest downsides of a syndication? Your money is tied up for a long time, and there's no liquidity at all.
Yep.
Now, if you can sell part of your stake in an apartment complex through a crypto exchange, that could be a huge advantage. And I suspect the syndicators, when they discover that, are going to really jump on that over the next few years.
Well, we think you're right, which is why we're thrilled that you're going to be joining us at the Secrets of Successful Syndication, just right around the corner. That's the event we do twice a year about real estate syndication. And for the first time, we're going to introduce cryptocurrency into the mix, because I think it is a critical thing to understand. But as you mentioned in the book, that these tokens, unlike cryptocurrency itself, actually fall under securities regulations. Can you speak to that?
Certainly. And there's a lot of confusion about that in the crypto community. I think of cryptocurrency as really in four types. We have currencies or money substitutes like Bitcoin. And then you have utility tokens, which have value within a company. So think of them like frequent flyer miles, right? You can use your frequent flyer miles to upgrade a flight with that airline, but you can't just go sell them outside. And then you have security tokens, which is what we're talking about. So security tokens can represent like stock in a company, or they can represent ownership in real estate. And in either of those cases, you're almost certainly creating a security, and you have to follow the same SEC guidelines that anybody else creating a security has to do. The good news is that that's actually easy to do. And in fact, by making the cryptocurrency tokens as smart contracts, you can automatically enforce all the SEC regulations as well as the regulations of all other government securities at the same time with essentially a smart contract. So there's some interesting things that will assist with compliance by using cryptocurrency in that case. And then, of course, I guess the last type is the smart contract of the four types. And the smart contracts are non-fungible. They're unique. So you can put your real estate contract online. There's a company out there right now which has a whole set of digital contracts, and you can get in, and everyone who's part of the contract can see it in near real time, edit it and collaborate, sort of like a Google Docs for contracts, only the contract pieces themselves are digitized. And so there's a lot of really good potential for having that contract immutable and stored on the blockchain as well.
Excellent stuff. Hey, we're talking with Steve Streetman today about the intersection of cryptocurrency and real estate. More when we come back. We'll also play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South home buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Are you achieving everything you want in life? What if there was a time-tested way for you to get all you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2022 Goals Retreat, January 7th to 9th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723 extension 18 to reserve your spot. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2022 Goals Retreat on the second weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723 extension 18 today.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you want to join us for the secrets of successful syndication, you better hurry. More than 270 people are signed up, but we've got space for you. All the details are on the website at realestateguysradio.com under events. We're talking about the intersection of real estate, cryptocurrency, and blockchain. And before we get back to an interview with Steve Streetman, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question and think you know the answer, quickly send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address. The first person that gets it right is going to get a copy of Steve's awesome book that he's going to sign to you. That is an awesome prize. Before we give you this week's question, last week on the Real Estate Guys, we talked about property rights, the rule of law, and what's going on with all the eviction moratoriums. We asked this: as of September 1st, 2021, most U.S. states no longer have a hold on evictions, but a few still do. Name them. And for the first time, we assigned a point system. Every state that you got correct got you a point. Every state on your list that was incorrect took a point away. Here's the states as of September 1st that still had somewhat of a hold on evictions: California, Illinois, Minnesota, New Jersey, New Mexico, New York, Washington State, and the District of Columbia. Here's our real estate trivia question for this week. In May of 2010, the very first real-world transaction in Bitcoin took place. 2 pizzas were sold for 10,000 Bitcoin. In what real estate market did that happen? Yeah, obviously the pizzas had to be delivered somewhere. Well, in order to make it a real estate trivia question, where was that? What city were those first 2 pizzas delivered that were paid for in Bitcoin? If you know, or you just want to guess, send your best answer to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Send us your name, your answer, and your mailing address. The first person that gets it right gets this autographed book, Cryptocurrency and Real Estate: How to Profit as Bitcoin and Blockchain Revolutionize Real Estate Investing. That's today's real estate trivia question. We're talking with the author of that book, Cryptocurrency and Real Estate, Steve Streetman. And Steve, this has been amazing. And I know for our listeners, it's like drinking from a fire hose, because having read the book and reread a couple of the chapters just to make sure I got it, it's easy to understand. It's not a very big book. I mean, this could have been 4 times the size, but you did an excellent job of kind of covering the general stuff. And you always said, well, there's lots of books on real estate, go read those. There's lots of books on stock investing and crypto, go read those. This is specifically about real estate and cryptocurrency. And this tokenization idea we were talking about, I think that bears a lot of merit for the reasons that you said. But, look what a syndication does. A syndication allows you to buy a $3 million apartment building without $3 million. You raise that money from, say, 30 people at 100,000. And of course, that is a security. You've got to follow all the regulations. We teach all of that at our 2-day event. But what the tokenization does is the same thing. It allows you to buy a slice, a portion, a bit of the apartment building. It's just a lot more liquid. So can you speak to that side of it? If I got 100 grand on a syndication, it's going to take 7 years till we're done, then I'm just waiting. But with these tokens, these securitization tokens, there's more liquidity in the deal.
Okay, so just remember, I'm not a securities attorney, and I'm not going to give securities advice, but this is my understanding of how this works. So if you were to buy into a syndication that's represented as a security token, the first one that was done out there was Aspen Coin, which is a hotel in Aspen, Colorado. And let's suppose you had $100,000 worth of that token when you purchased it. And maybe the whole price of the hotel, the value of the hotel has gone up 50%. So those tokens are now worth $150,000, and you'd like to cash in $50,000. So there are SEC regulations. I believe you have to hold interest in a syndication for a year before you can go into a secondary market. But now those tokens are on an exchange. They're actually on a cryptocurrency exchange. And there's an exchange that's focused on real estate tokenizations out there right now. And there's a couple of others being developed. So now you're an investor, probably an accredited investor, because these are going to work much easier for accredited investors. And you have your tokens on an exchange and you say, well, instead of this hotel, I would rather own an apartment complex. And here's a security token that's for an apartment complex. So maybe I trade a third of my ownership, $50,000 in Aspen coin, for $50,000 worth of apartment coin. And so now I've actually traded one real estate piece of ownership for another. I've kept part of my ownership in the hotel, and I've managed to diversify my assets. And that all can happen on a cryptocurrency exchange. And the tokens themselves will validate that this is a legitimate exchange and that it follows the security rules. So I won't be able to do it if I'm not allowed to do it. So this is something now you can go on, you can browse through exchanges. Now, I will say today, most of these exchanges might have 5 alternatives, and many of those are in their first year. So you won't be able to trade for those yet.
Yeah.
But the mechanics are there, and the prototype is there, and the ability is there. 2 to 3 years from now, this will be a much more common thing to be able to do.
Which is exactly why we want to talk about it now and be thinking about it. The number of transactions aren't big, but that's all going to change. And of course, as acceptance and volatility changes and all those things happen, we'll see changes in both, real estate and in cryptocurrency. Let's talk about how you structure a transaction, because you actually go into great detail. And again, also not an attorney, but the idea of, well, what do I do? I mean, I get if I just have a pile of Bitcoin and I want to buy a property and I find a seller that'll accept it. That's pretty straightforward. But there's more to be considered, and you cover it pretty well in your book. Take us through some of that.
Sure. So most of the transactions that have been done with Bitcoin, the person with Bitcoin sells it the day of closing and then gives them the cash. So I'm not talking about that. That's just buying real estate with cash. Anybody can do that.
Yep.
Well, now let's talk about if you want to do it with cryptocurrency. So what we often find is that the seller can't use the debt side of their capital stack. They can only do their equity side of the capital stack. So if a seller owns 40% of their property, there's 40% that they really have the ability to trade for cryptocurrency.
Because the rest is encumbered by the mortgage.
Yeah, and right now, except for the lender you were talking about, most lenders aren't accepting cryptocurrency. And if they are accepting cryptocurrency, it's almost always only Bitcoin. So if you have one of the other 9,999 cryptocurrencies, you're kind of out of luck. But a lot of sellers aren't necessarily looking for price. And I've structured deals where I've got 20% down payment in cryptocurrency. And so the seller is going to actually accept that cryptocurrency directly in their own wallet at closing. And I've had to work that out with closing attorneys, right? Because you don't have a wire going into a closing attorney, and most of the closing attorneys don't want to touch the cryptocurrency. They just don't know how to do it. So we work out a sequence so that at some point during the closing process, we send that cryptocurrency to the seller, and then we go back into the regular closing process once that's received. Of course, it's easy to tell if it's been received. Anyone in the world can go onto the blockchain and look at the wallet addresses and confirm that transaction has been done. So that's, kind of a nice thing about the transparency of the blockchain. So when you do the down payment for cryptocurrency, you do have issues with lenders being concerned about that. You want to make sure you have a very valid appraisal so that you can show you haven't just inflated the value and gotten a higher loan if you're trying to get a loan as part of it. Some sellers will accept it, some sellers won't. Certainly, I would say cryptocurrency works really well in conjunction with seller financing. I'm finding that is a much easier approach because now the seller really has control of both sides of that. They can work the loan side and accepting the cryptocurrency side. And then there's other things you can do if the seller won't accept it for payment. I've used cryptocurrency as a deposit. So an escrow deposit to kind of buy myself due diligence time. And so I've done that on 3 or 4 projects at this point. And you can even let the cryptocurrency go hard at the end of the deposit period, or you can replace it with cash, depending on how your seller wants to work that out. So there's really a whole number of things you can do. And I'll say one more thing is that because cryptocurrency value has gone up, it's become much more acceptable to get a loan secured by your cryptocurrency, just as you might get a loan secured by stock portfolio. And then you can use that money now, it's cash that can go into the real estate, but it's really funds secured by your cryptocurrency. So there's a number of different ways to work it. And it depends on who's willing to accept the cryptocurrency, who's willing to make loans. And you have to structure it a little differently in each case. And there's almost always somebody you have to convince or lead them by the hand through the transaction because it's so new. But it won't take that much longer, I think, before some of these transactions become almost standard.
Now, interesting enough, Steve, one of the things that you mention is the idea that international real estate is even more likely to be able to be purchased in Bitcoin and other cryptocurrencies. And of course, that goes hand in hand with the idea that cryptocurrency, by its very design, is easy to move along borders. When I have to wire a big old chunk of money, that comes with all kinds of hair on it sometimes. Speak to that part of it.
Well, I know several people who've had deals just fall apart because of government interference in money transfer across borders. Now, whether you're in favor of government interference in money transfer across borders or not, the fact is that there's really no way for a government to interfere with cryptocurrency transfer across borders. The wallet kind of exists in the cloud, and the transfer exists in the cloud, and it's a public transaction that's on a blockchain maintained around the world by all kinds of different people. So there's really no way to stop it. You can send Bitcoin or any other cryptocurrency in any amount that you want in a couple of minutes. And it's a matter of knowing the wallet address you want to send it to and putting an amount in and pushing send. It's really that hard.
Yeah, and I think that is one of the big attractions. So many things we could continue to talk about, but we're going to urge people to get the book. It's an easy read, even if you don't know that much about technology. Steve does a great job of breaking it down, explaining what the ledgers are and how that works, but a lot about exchanging and real estate. You go into the exchange tokens. We won't talk about that today, but it's in the book's called Cryptocurrency and Real Estate, How to Profit as Bitcoin and Blockchain Revolutionize Real Estate Investing. But also, Steve, you put together kind of a cool report for our listeners. So even though we're going to strongly suggest you get the book, you can get kind of a head start on that. Steve's come up with a report on the 5 strategies for using cryptocurrency in a real estate transaction. Tell us just the high level of what they're going to find in the report, Steve.
Well, they're going to find some basics about actually buying real estate with cryptocurrency, a little bit about tokenizations, a little bit about NFTs, or non-fungible tokens, and just one more loan, I guess, about the loan strategies as well. So there's about 4 or 5 strategies in there. It's very high level. It's a very short report and easy read, but it kind of gives you the ways of thinking about it creatively. So then you can dig in further and get more information.
If you'd like to get Steve's free report, the 5 strategies for using cryptocurrency in a real estate transaction, just send an email to crypto@realestateguysradio.com, CRYPTO, crypto@realestateguysradio.com. You'll also receive information on how to order this awesome book. We are certainly looking forward to seeing you at the Secrets of Successful Syndication. And Steve, thanks so much for sharing with us today.
I'm looking forward to seeing you there as well. Have a great day.
There's Steve Streetman. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hey, this is John Asraf, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into this show. Hey, if you ever want to do bigger deals using other people's money or cryptocurrency, then come on out to the Secrets of Successful Syndication. It is right around the corner. Add your name to the list at realestateguysradio.com under events, where you'll find the Secrets of Successful Syndication. Awesome that Steve's going to be joining us.
Yeah, you know, when I got the book, I grabbed it and read it on my way out to the Jacksonville field trip, and I devoured the whole thing on the flight out before I even landed. I mean, it was like 2 chapters in. I said, oh, I got to call this guy. We got to get together. Because the light bulb really went off for me, as I said at the top of the show. And the other part of it is the creative side of it is, you know, it's one thing to have this tool in your toolbox, if you will, that you barely understand how to use. But when you see it in the context of actually putting deals together, and then you begin to understand the components of it, because it's not just the crypto side of it. The crypto's interesting, but it's really the blockchain. And I know that blockchain is going to be a revolutionary technology, the same way the technology that created the internet was a revolutionary technology. Changed the way people communicate. It changes the way people do business. It changed a lot of industries. I mean, a lot of people keep all of their books and their records and things are all digital today, and they're on the cloud. And these are things that didn't exist until this new technology came along. And so then when I started looking at what was going on in the real estate community, which is notoriously slow for adopting new technology, and yet the banking industry is probably even further behind. And yet you got central banks talking about creating central bank digital dollars. And if you really think about the way we conduct business with dollars today, or whatever currency you use, it's largely digital anyway. So this is going to be a matter of control, which, going back to Freedom Fest at the top, is what these folks, the people that are the hardcore original Bitcoin people, were like, hey, we're going to get out of the system. And of course, the flip side of that is, you know, only criminals want to get out of the system, which isn't true. But clearly, this is a tool that people could use if they wanted to be not tracked. That's part of it. So I think that the regulators and the technologists are figuring out, you know, the know your customer rules and some of the things that are kind of pervasive in the traditional financial services arena. And so because of that and the inability of the government to stop it, it's really a matter of them just trying to manage it and everybody figuring out how it's all going to come together. And that's beginning to happen. And so to have somebody in the stable who actually kind of understands it from the technology all the way down to the foundational technology, which I think is really important, and then to also understand real estate, bread and butter real estate, and then the creative side of real estate, and to put all that together, and then you marry that to the syndication component, which is why we invited Steve to be part of the syndication faculty, because there are a lot of Bitcoin billionaires and millionaires out there that I think innately understand, hey, this is great, but I need to convert this into something tangible, something real, something productive. And real estate is a natural place for people who have Bitcoin or crypto wealth to convert a piece of it into something a little bit more tangible. And I think that opens up a big opportunity for syndicators to tap into that market. But to do it, you need to learn how to speak the language, and you have to have advisors on board who can actually help you craft those transactions and really navigate it, know what you're doing.
And I have a friend who's accumulated a whole bunch of Bitcoin and never sold any of it. So you could definitely call him a Bitcoin millionaire, but I don't think that you just have to sell it for something real. You can take a little bit of your profit. All of a sudden, you're interested in diversifying into an asset like real estate. And real estate brings so many different ways to make money, as we talk about week in and week out on the show. And so as soon as we start to open the acceptability of Bitcoin into these transactions, it's going to be huge, and not just Bitcoin, but other cryptocurrencies. And the creative part, I think, really is the key. What links these things together is, Steve's background as being, a member of the Exchange Council. I've never seen more creativity than at one of those meetings. It's crazy to see the way that they can put together deals when they take the dollars out of the equation, when they start to trade in terms of what they have and what they want. It's a fascinating part of real estate. We've done a couple of shows on it over our 25-year history, but it's certainly not our main wheelhouse. But I think it does just show. And I think as a real estate investor, you got to be creative today, maybe more than ever before. As prices go up everywhere and people are thinking, well, how can I afford it? Well, maybe you just got to think differently. Steve said something that was critical, which is it's not always about the price. It's what the other party wants. That's at the heart of exchanging and also at cryptocurrency. So it's a fascinating topic. If you'd like to learn more, easy way to start is to get Steve's free report. He, at our request, threw that together. He doesn't have a course to sell you. He's not, out there on the speaking circuit, any of that. But he's got a great way of helping lay people understand it. All you have to do is send an email to crypto@realestateguysradio.com. Get a copy of the report. And then if you are thinking about either figuring out how to unleash some of your crypto into real estate, or how to invest alongside somebody doing a bigger deal, or you want to raise money to go do bigger deals, and that could include cryptocurrency, well, then certainly come on out to the Secrets of Successful Syndication. We're doing it right around the corner, September 17th and 18th in Dallas. If you can't make that one, we'll do it again in March of 2022. But why let 6 months go by? Who knows what the price of cryptocurrency will be then?
Yeah, I mean, we talk about that all the time. When you're in an inflationary environment, every day that you wait to get control of assets that are inflating is time that you're losing ground to the inflation. Of course, debt allows you to do that. One thing that Steve taught me that I think is fascinating is you don't have to convert or sell your Bitcoin in order to put it into real estate. Just like gold, you can borrow against it and keep all of the upside of the gold, and then take the proceeds in cash and put that into real estate and have all the upside and tax benefits and income of real estate. And as long as that arbitrage, the cost of the borrow versus the yield on the investment, is a positive spread, it can be a great way to expand your portfolio and still keep your hands on both sides. So lots of creativity, lots of things to understand. I think if you're interested in all this, certainly send that email to crypto@realestateguysradio.com. Get Steve's report, and we'll put a link in there on how to get his book. And then come out to Secrets of Successful Syndication. Meet him. We'll talk shop. It'll be a lot of fun.
Big thanks to Steve Streetman for sharing his immense knowledge and this great book with us. He sent us each an autographed copy, which is how it started the conversation, and sure glad he did. Next week on the show, we're going to talk about two very different real estate asset classes that have a lot of promise and potential, and you'll meet a gentleman that came to the Secrets of Successful Syndication 6 years ago and today has raised more than $350 million. Next week on the Real Estate Guys radio program. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.